All right, welcome to another deep dive here. Today we're going to be tackling Astera Labs, ticker symbol ALAB. And this company is really at the heart of a super interesting kind of intersection. We've got the massive growth of artificial intelligence, and then you've got this, I guess, kind of separate but related massive growth in cloud infrastructure and cloud computing.
Yeah, for sure. And so for this deep dive, we've got a lot of material for you. Astera Labs has a really good deep research guide we'll be going through. And then we've also looked at, a lot of financial news articles and some analyst perspectives on the company, which is all down in the description for you.
Exactly. So our mission for this deep dive, if you will, is to really understand the core business of Astera Labs. What do they do to assess its financial health and to look at how the market currently views this company? And so with that in mind, let's jump right into it. I think maybe first, high level, what does this company do?
Yeah, so basically Astera Labs develops connectivity solutions. And these solutions are essentially used in AI and cloud infrastructure to kind of get rid of these performance bottlenecks that can happen in these massive data centers. So they're really trying to make these data centers work much, much more efficiently.
Got it. And they operate on a fabless model.
Yeah, so they actually use a fabless business model. So this basically means that they design and they research and they market all of their semiconductor technology, but they don't actually have their own manufacturing plants.
Oh, wow.
So they outsource that to different foundries, and their main partner for that is TSMC,
Oh, okay.
Taiwan Semiconductor Manufacturing Company. That's them.
Got it. So they don't have the overhead of having to have their own factories and all that. What are the key benefits of this fabless approach?
Yeah, it really allows them to be much more agile. Like you said, they don't have the upfront costs of building a plant and maintaining a plant, but they can also move very quickly. If there are changes they need to make, they can respond to those changes rapidly. And they also leverage the expertise of, these huge companies that are, at the forefront of all the latest technology for semiconductors, like TSMC. If you look at their overall mission, their goal is to deliver, cutting-edge analog semiconductor solutions that improve cloud computing, data centers, and AI applications.
Okay, so how do they make money? Where does the revenue come from?
So they make most of their money through the products themselves. So these semiconductor products make up about 90% of their revenue.
Wow, so most of it.
Yeah. And then the rest, the other 10% comes from services. And that could be like engineering support and also like customized product development.
Interesting.
Yeah. And in fact, they actually saw a 242% increase in their revenue year over year in 2024. And that brought them up to $396.3 million in revenue.
So that's a huge increase in revenue.
Yeah, and just shows how much demand there is for these products in AI and cloud infrastructure.
That's amazing. So they have this offering called the Intelligent Connectivity Platform. What is that?
So the Intelligent Connectivity Platform is essentially like a suite of different solutions they have for data and network and memory connectivity, and it's all based on this software-defined architecture that they call Cosmos.
Okay, so we noticed that a big chunk of their revenue from the last fiscal year, originated in Taiwan. What might that tell us about the company?
Yeah, it could mean that a lot of their customers are actually located there, or it could also mean that these data center hubs or their manufacturing partners in Taiwan are putting their technology into systems that are then shipped out to the rest of the world. So it's something to kind of keep an eye on because that's a potential concentration risk geographically.
Interesting, yeah. Okay, so let's dive into these different products a little bit. So we keep hearing about Aries, Scorpio, Leo, Taurus. What are the different things that these different families of products do?
Yeah, so we can start with Aries. Aries is their PCI, ECXL, smart DSP retimers, and smart cable modules. So what this does is it makes sure that high-speed signals are really good, the integrity of them is very high, and it extends the distance that they can travel. And that's especially important in these really, really fast AI and machine learning systems. And it's interesting to note that they're very often first to market. So like, for example, their Aries products for PCI 4.0 and 5.0, they were the first to market with those.
And being first to market can be a huge advantage.
Absolutely, yeah. And then you have Scorpio. Scorpio specifically for cloud scale AI infrastructure. So these are the smart fabric switches, and they provide really high bandwidth with very low latency, connecting different things.
Sure.
And the Scorpio P series is actually the first PCIe 6.0 smart fabric switch. So that's specifically for AI head node connectivity, and that's really pushing the edge of what's possible.
Wow.
And then there's Leo. So
Okay.
Leo, CXL smart memory controllers, those are all about addressing the challenges in memory bandwidth and capacity in cloud servers. And this is really important for AI workloads. And CXL is a technology that allows you to more efficiently and flexibly share memory and accelerators in a computing system.
Got it. And what about Taurus?
Taurus is their Ethernet smart cable modules. And they're optimized for these high-density environments you see in AI and ML, machine learning racks.
Yeah.
And so they support really high-speed Ethernet, which is used for connecting lots of processors and memory units together.
Got it. And then you mentioned Cosmos before. Is
Yeah.
that kind of the software that ties it all together?
Exactly. The Cosmos software suite, that's what they call it. And it's basically, giving you the tools to manage and optimize this whole infrastructure, all these products at cloud scale. And so, for their clients, this is really important because this software is what allows them to really take advantage of this hardware that they have.
All right. So who are their customers? Who's buying these products?
Well, their biggest customers are these hyperscalers. So we're talking about companies like Amazon, Google, Microsoft, these huge cloud companies.
Makes sense.
But they also work with other companies in the data center ecosystem. So it could be companies that are, building their own large-scale computing infrastructure. They've really focused on building these strong relationships with these huge companies in this market.
Yeah. Okay. So we've talked about the business. Let's look at the leadership, the management. Who are the people that are running Astera Labs?
So leading the way, we have Jitendra Mohan. He's the CEO, and he's one of the co-founders, and he's been CEO since November 2017. He has over 20 years of experience from companies like Texas Instruments and National Semiconductor.
Okay.
And then you have Sanjay Gajendra, who's also a co-founder, and he's the president and COO, and he's also been there since 2017.
Okay.
And he has a very similar background. He has a lot of experience in marketing and product management from the same companies.
Got it. And so the co-founders have been running this company for over 6 years now. That's a good sign of stability.
Absolutely. And the average tenure of the other management team members is also about 6 years. So you have this real experience in the leadership, which is great to see. And actually, they've added some new people recently from companies like Marvell, Meta, and Broadcom. And so that could be, adding some new ideas and helping them achieve their growth. Yeah, and they've also added someone to their board of directors who has a lot of experience. So Dr. Craig Barrett has a great track record. He's worked at companies like Atheros and Google and Qualcomm, and he has a lot of experience in helping companies scale, especially in the technology industry. So that's a big plus.
Yeah, that's fantastic. So it seems like they've been pretty good at navigating changes in this industry.
Yeah, they have. So, for example, they've been able to adjust to the evolving PCIe standards, and they've shown they can recover when there's a problem. So in 2023, they actually had a dip in revenue because a big customer of theirs adjusted their inventory levels, but they were able to bounce back from that really quickly, and that just shows you that there's this underlying demand that's still there.
Yeah. Well.
And in terms of keeping their shareholders informed, they do a pretty good job. They have regular quarterly earnings calls. They talk about their finances and what they're looking at in the future. They go to technology conferences. They engage directly with investors and with the industry. And they have a whole section of their website for investor relations with, news and financial updates. And you can even find recordings from investor events there.
That's great. And they've even got procedures for shareholders to contact board members directly, right?
Yeah, they do. They have a whole setup where you can actually communicate confidentially with the board members that aren't part of the management team. And that's something that's considered best practice in corporate governance.
Okay.
And ethical conduct is really important to this company. They have this code of business conduct and ethics that lays out all the expectations for stakeholders. And if you look at their core values, they really emphasize integrity and focusing on the customer and trust. And that just shows you that they're really committed to doing things the right way.
Yeah, it's good to see. So we did see that there was some insider trading activity going on with some of the top executives selling stock. What do you think about that?
So, yeah, it's something that catches people's attention when you see executives selling stock. So we saw the CEO, Jitendra Mohan, selling some. We saw the president and COO, Sanjay Gajendra, selling some, and also the CFO, Michael Tate. Now, a lot of these transactions were done with prearranged trading plans, and those are things that people will set up to kind of manage their personal finances or to diversify their investments. It doesn't necessarily mean that they're negative about the company's future, but the recent trend, you look at the overall picture, it does lean towards insider selling. Something to be aware of, but it's just one piece of information, one data point.
Okay. So in terms of the overall corporate governance structure, does it seem like it's solid? Does it seem like it's structured well?
Yeah, it does. They've got this, really good set of corporate governance principles that they're using. The board of directors has a lot of experience, and they have different kinds of expertise, which is really good to see. And they have different committees to oversee everything. So they've got an audit committee, a compensation committee, and then the nominating corporate governance committee. And they've all got, clear responsibilities.
Okay.
And then they also adopted these corporate governance guidelines to ensure that the leadership is effective and that everyone's accountable for what they're doing.
Great. Okay, so let's switch gears a little bit and let's talk about their financials. So how big is this company right now? What's their market cap?
So as of March 2025, their market cap is somewhere between $11.5 and $12 billion.
Yeah.
So that gives you an idea of their size.
Okay.
Yeah. But one thing that's interesting is that their price to earnings ratio, the PE ratio, it's negative.
Yep.
And that's because they had, a negative net income. And so that affects the calculation. They did reach GAAP profitability in the fourth quarter of 2024, which was a big achievement, but they still have those losses from before that are affecting the PE ratio.
Got it.
Yeah. So the negative PE ratios, they change depending on what time period you're looking at. But that huge revenue growth that we were talking about, 242%, that really shows that the market is accepting their products. They want those solutions. And in fact, they're still expecting, big revenue in the first quarter of 2025. So, the negative PE, it reflects that they've been in this phase of really rapid growth. And sometimes when companies are, trying to penetrate the market really quickly and developing all this new technology, sometimes they're not profitable right away. But reaching GAAP profitability in Q4 2024, that's a really good sign that they're starting to convert that revenue growth into actual profits.
Yeah, it does seem like a pretty big moment for the company.
Absolutely, yeah. And if you look at their profit margins, their gross profit margin is very high. So for the full year 2024, it was 76.38%, which is really good. And in the fourth quarter, is around 74%. So that means that their cost of producing these goods, it's under control. And then if you look at the operating profit margin, the GAAP figure for 2024 was negative, so negative 29.3%, but it actually turned positive in Q4, so it's 0.1%. The non-GAAP operating profit margin, which doesn't include certain things like stock-based compensation, that was a lot stronger. So it was 30.2% for the whole year and 34.3% in the fourth quarter. And then, you see a similar thing with the net profit margin. The GAAP net profit margin was negative 21.05% for the year, but it jumped to a positive 17.52% in Q4. And then the non-GAAP number was even higher. It was 30.2% for the year and a whopping 47.12% in the fourth quarter.
So reaching profitability, that's a big deal.
Yeah, yeah. And it means they're starting to be able to turn that revenue, all that revenue growth into profit using those standard accounting principles, the GAAP.
Okay, so how much debt are they carrying? Are they heavily in debt?
Actually, they're not. Their debt-to-equity ratio is basically 0.
Okay.
Yeah. So that's a sign of a strong financial position. They're not relying on borrowed money, and that reduces their financial risk.
Got it. And are they generating cash right now?
Yeah, so their free cash flow, it was positive in 2024.
Okay.
They made $102.43 million.
Okay.
And that's a huge improvement. Before this, their free cash flow was actually negative. So that means that now they're bringing in more cash from their actual operations than they're spending on their capital expenditures. So that's a great sign.
Yeah. Yeah. No, that makes sense. Okay. So it sounds like, they have a lot of revenue growth. The earnings are kind of a new thing. The profits are kind of a new thing for this company.
Exactly. Yeah. It was just in Q4 of 2024 that they became GAAP profitable. So this is their first time really being profitable. So the trend looks good, but it's something they'll have to keep showing, keep proving, over a longer period.
Yeah.
Yeah. And they don't pay dividends right now.
Okay.
And they haven't paid dividends in the past.
So I imagine they're taking that money and reinvesting it in growth.
Exactly.
Yeah.
That's very typical for a company like this, a technology company that's, in this growth phase.
Yeah. Yeah.
And they're in good shape to do that, to keep growing. We talked about their debt being very low, but their liquidity is also very strong.
Okay.
So they've got these high ratios like the current ratio, the quick ratio, all these things that show that they can cover their short-term liabilities.
Mm-hmm.
And they have a ton of cash right now.
Okay.
Over $900 million in cash and short-term investments. Could be a lot of flexibility.
Yeah.
And their cash runway, based on their free cash flow, is over 3 years.
Okay. That's good to hear. So overall, it seems like the financial picture for Astera Labs is pretty positive,
Yeah.
especially with that recent news that they're GAAP profitable.
Absolutely, yeah.
So let's jump into the second half here. We've talked about the business, we've talked about the financials. Now let's look at the market. What is the market sentiment? How is the market? How are people viewing Astera Labs right now?
It seemed like the market is pretty positive about them. Most of the analysts have either a buy or strong buy recommendation on the stock.
Okay.
So they're expecting good things. And if you look at the price targets that the analysts are setting, for the next year, they're ranging from $122 up to $125.
Okay, so that's significantly higher than the current price.
Yeah. I mean, the price right now is somewhere between $73 and $74 a share.
Okay.
So there's a lot of room for potential growth there, according to the analysts. But it's important to note that there's also, a pretty big range of those targets. So you have some people that are more optimistic, setting their target at 157.14, and then you have others that are a little bit more cautious with their target at $82.
Got it. And the news about the company has been pretty positive lately too, right?
Yeah, I mean they've had some really good news lately. So their partnership with NVIDIA is big, and they've launched new products like in the Scorpio series, and then like we've talked about, their financial results are really good, especially with that record revenue and becoming GAAP profitable.
Yeah, it's all looking good there. In terms of short interest, are a lot of people betting against this company?
So the short interest, it's about 7.64% of the float, which is about 9.5 million shares being shorted.
Okay.
And then if you look at the days to cover ratio, which tells you how long it would take those short sellers to close out their positions, it's somewhere between 1.7 and 4.14 days.
Okay.
So that suggests that there's a moderate level of bearish sentiment that some people are betting against the company.
Okay, and what about the options market? Any insights from there?
Yeah, so there's been some interesting activity with the options. So we saw some big investors taking some bearish positions, and they were targeting, the price to go down to between $60 and $75 in the short term.
Okay.
But if you look at the overall put-call ratios, it suggests that the broader sentiment in the options market is actually a little bit bullish.
Oh,
so you kind of have these different perspectives, these conflicting views among investors.
Yeah, that makes sense. And we talked about insider trading before. Any other thoughts about that with the ownership structures or anything to learn about the company from that perspective?
Yeah, I mean, we did talk about those insider sales. And like I said, a lot of those were part of those prearranged plans. But there has been this trend towards insider selling. And that's something that a lot of investors pay attention to. So it's something to keep in mind, even though there could be other reasons for why those sales are happening.
Yeah. Okay. So let's move into a little bit more of a structured analysis. Let's do a SWOT analysis so we can look at the strengths, weaknesses, opportunities, and threats for Astera Labs.
Okay.
Let's start with the good stuff. What are the strengths of this company?
Yeah, so their strengths are all tied to their competitive advantages. So they have a lot of expertise in these high-speed connectivity technologies, especially in the PCIe ecosystem.
Okay.
And they're really good at innovating. I mean, they were first to market with those Aries retimers and with the Scorpio P-series switches.
Yeah.
And they're able to customize their solutions, based on what the customer needs. And that's through the Intelligent Connectivity Platform and the Cosmos software. And then they've got these great partnerships with big players in the industry like NVIDIA, AMD, Intel, and Micron. And then also they're really committed to quality and interoperability.
Got it. And so what about the weaknesses?
So the weaknesses, I mean, one thing is that, like we talked about, they just became GAAP profitable. So their history of actually making profits, it's kind of short.
Okay, so that track record's not really there yet.
Exactly, yeah. And then their valuation is very high compared to the rest of the industry, which means that a lot of growth is already baked into the stock price. And then also they're kind of reliant on a few big customers. We talked about the revenue concentration in Taiwan.
Right.
And how much that one customer's inventory adjustment affected them. And then also, if you look at their return on invested capital, the ROIC, it's been negative in some periods.
Hmm.
Yeah, and that's a little concerning, even though sometimes those numbers are calculated a little differently depending on the source. So it means that their investments haven't always generated, really big returns yet.
Okay. So what are the opportunities? What could this company really take advantage of?
Yeah, so they're kind of in the right place at the right time. The semiconductor market is growing really fast,
Uh-huh.
especially because of AI and high-performance computing and the AI infrastructure market.
Yeah.
That specific market
Uh-huh.
is expected to grow super fast, like a 30.4% compound annual growth rate from 2024 to 2030.
Wow, that's a lot of growth.
It is, yeah.
Yeah.
And data centers, they're using more and more advanced memory chips,
Okay.
and that's something that Astera Labs helps with.
Got it.
And then even, other industries like automotive with the self-driving cars and electric vehicles, all of that is driving demand for semiconductors.
Yeah. So a lot of tailwinds for this company.
Absolutely, yeah.
Okay. But what about threats? What are the things that could hurt Astera Labs?
So, the biggest threat is competition. There are a lot of big established companies out there like NVIDIA, AMD, Intel, Broadcom, Marvell, all these companies.
Right.
And they're all competing in the same space. And then you've also got this trend where these big cloud providers, they're starting to invest in their own chips.
Oh, wow. So that's cutting out the middleman.
Exactly, yeah.
Yeah.
So that could mean that they're not going to rely on companies like Astera Labs as much in the future. And there are also other, smaller companies that are competing with Astera Labs directly on specific products. And then also the regulations are getting more complex. There's, export controls and the U.S. Chip PS Act, the EU Chip PS Act, all these different things.
Uh-huh.
And the semiconductor industry, it's really hard to get into this industry.
Yeah.
So there are these high barriers to entry. You've got to invest a ton of money in research and development, in manufacturing. There are these economies of scale that the big players have, and the supply chains are very long and complex.
Right.
So it's hard to find components sometimes.
And then also you need really specific knowledge to work in this space.
Absolutely, yeah. So you need really skilled workers, which can be hard to find, especially with so much competition out there.
Got it. Okay, so that's a really good overview of Astera Labs. We've talked about the business, the financials, the market, the strength, the weaknesses, opportunities, the threats. So earlier you mentioned, or we mentioned, I guess, at the beginning, that there was a surprising element about the valuation of this company. What is that surprising element?
So, we've talked about all these great things about Astera Labs, right?
Yeah.
They're in this high-growth industry. Their technology is really innovative. They're making profits now.
Yeah.
But their valuation is extremely high.
Yeah.
And their price-to-sales ratio, their PS ratio, it's somewhere between 15.59 and over 30. That's really high.
Mm-hmm.
And if you compare that to other semiconductor companies, their average is more like between 7.09 and 11.49.
Yeah.
So that means that, the market is already pricing in a lot of future growth for Astera Labs. Investors are expecting them to do really well.
Yeah, so they better deliver.
Exactly, yeah. And that's the big question, right? They are dependent on AI and cloud computing to keep growing really fast. Yeah. And we've talked about how the competition is increasing. So that's something that, you have to think about. What happens if things slow down? What happens if the competition gets even more intense? How will that affect their valuation? That's something for you to consider as you're doing your own research.
That's a good point to end on. So yeah, that wraps up our deep dive on Astera Labs. We've looked at their business, their financials, how the market sees them. And as always, this analysis is based on the information that they provided, that research guide that they put out, and different news articles and analyst reports. You can find all of those links down in the description below.
Yeah, and if you enjoyed this deep dive, be sure to subscribe to the Stock Analytics AI YouTube channel for more. And you can also check the comments section. You might find some stock suggestions down there. But just remember, this is not financial advice.
Right. This is for informational purposes only. It's not financial advice. And, AI is a great tool, but it's just one tool.
Yeah.
So do your own research. Investing in the stock market always comes with risks. And, make sure that you're making decisions based on all the information that's available. Thanks for joining us today.
Thanks for listening.